On a news-heavy morning, the market is behaving oddly. I mean, maybe not terribly oddly given what I predicted yesterday night, but let's get into it. The big story, the breaking story, I'll get to in a minute, but let's get through the Tesla stuff first. Tesla bull and head of ARK Investment, Cathie Wood, admitted during an interview with Bloomberg that she does believe the company has experienced some brand damage due to CEO Elon Musk's political involvement. However, she doesn't believe it is a long-term issue. Now, this is exactly what I've been saying. I've been saying, on the one hand, that there is some brand damage, probably especially in Europe, maybe a little bit in the United States, probably almost none at all in China, but that there could be some missing sales in Europe in particular that could be attributed to what's going on politically. I also said that I think that there would be a reaction to that caused by conservatives who are more interested in the brand. Moreover, these kinds of things tend to blow over, and we'll see what happens. Cantor Fitzgerald reaffirmed its $425 price target on Tesla shares this morning with a new note. With shares currently trading at about 350, we remain bullish ahead of several material near-term potential catalysts. No kidding. On the affordable models, they said we expect an initial price of around 30,000 inclusive of the tax credit. Nah, that's completely wrong. Timing, given likely negative impact to vehicle prices due to tariff implementation and the likely removal of the tax credit, which we'll talk about also in a minute. Other catalysts include Optimus and Semi, of course. High volume production of Optimus bot, initial deliveries of Optimus to customers we expect in 2027. The initial deliveries of Optimus 2027, and introduction of the semi truck, we expect SOP in 2026. That's good. And for Tesla to enter the self-driving trucking industry were all cited as reasons for their long-term drivers. It might be a great time to consider that there has never been anything remotely close to the opportunities set in front of Tesla, says me. Number one on that. You either believe Optimus will be the biggest product ever and that the genius crew at Tesla will grab significant share, or you don't. If you believe it, Tesla's undervalued by a ton. B or two, same thing for Robotaxi, but obviously way sooner, like maybe in 2 weeks. C or three, same thing for FSD unsupervised. People aren't even talking about this anymore, but it will be the biggest catalyst to the sale of a vehicle ever in the history of the automotive world when you can completely drive your car from the back seat. That's what I believe, and I believe that this is going to hit later this year, and this will be a massive, massive encouragement for people to buy Tesla vehicles. Will completely dry up any demand problems. D, energy storage will at least triple current levels in 2026 with two new plants. This is a known fact. And then E, the Tesla Semi, which was mentioned by Cantor Fitzgerald, will produce at least the equivalent of the Model 3 in profits in 2026. At least the equivalent of the Model 3 in 2026. That doesn't even count the FSD side, which Cantor Fitzgerald just mentioned. And then F, the Model Q will dramatically increase sales, says everybody. Even Gary Black says that. G, Dojo is lurking in the background and is growing like crazy, and the opportunity there is mammoth, and nobody's giving $1 of value to that in their consideration. So, other than that, anyway, the street says this morning: Apple's net promoter score. Wait, what did I do here? Tesla. Okay. Tesla's net promoter score is huge. It's 97%, 97%, significantly outpacing that of its auto rivals. In fact, anything above 40 is considered good. This is especially impressive considering Tesla does not advertise like its traditional rivals. However, brand loyalty is fluid, and companies do there's a lot of damage sometimes that would take away from that net promoter score. Possible cause of Tesla being down in an up market would be this little reported story today. USA Today is saying this: Section 11.2002 on page 30 of the One Big Beautiful Bill documented is titled Termination of Clean Vehicle Credit. The credit was originally set to expire in 2032. A provision of the bill accelerates the expiration to December of 2025. Americans will lose the ability to claim the EV tax credit as of the end of this year, as predicted by who? Oh, that would be moi. I have multiple videos as proof that I have said all along, I thought that's what would happen, that they couldn't process it fast enough, that Congress wouldn't be able to get to it, and that once they did get to it, they would give a 6-month lead time for people to take advantage of it one last round. I think this is exactly what Elon would love to see happen. And by the end of 2026, of course, I'm sorry, 2025, of course, the unsupervised will be in place. And I don't think that Tesla will ever have an issue selling a car again. The bill also targets EV and hybrid vehicle owners under a proposal from the White House Transportation Infrastructure Committee, calls for annual fees, according to MarketWatch. Electric vehicle owners will be charged $250 annually, and hybrid owners will be charged $100 annually if the bill is passed. So why the attack on electric vehicles, and what does this mean for car buyers? Quite frankly, it's not an attack on electric vehicles. It is an effort to reduce the overall budget. And the reason for the $100 and $250 annual charges is because electric vehicles do not contribute to the national expenses related to road building and road repair. States are doing this. The federal government's doing this. As much as we might regret it, the electric vehicles are going to have to pay their fair share. And here you go. This is where it starts. This is Randy Kirk. Please hit the like, subscribe, notify, all that jazz. Later on today, what are you going to get? You're going to get Larry Goldberg, as always, on Monday, and Brian White at 7:45 tonight. Okay, as I said over the weekend, it was unlikely that the Moody's report would have lasting impact. And I was even more right than I thought. There was no impact at all. In fact, the markets are already in the green. They were in the green within an hour after the opening of the market. But offsetting the Moody's report would be Republicans passing the big, beautiful bill out of committee. Now, there was also growing sentiment that Trump has isolated Iran and Russia and the Ukraine, that the rest of the world is seemingly on the prosperity train, and even Iran seems pretty interested in playing along in order to participate in the coming golden age. So the golden age would not just be the United States, but what Trump is proposing, what he's selling around the world, is the golden age can happen for the entire world if everybody gets on board with the new set, the new approach, the new way to deal internationally, both in all aspects of international relations. And there are sticking points. There's just a few countries now, in particular, Iran and Russia, Ukraine, and then North Korea. That's pretty much it. Trump is speaking with Putin today by phone and reports he is very frustrated with the situation. But if either Russia or Iran blinks, it would put pressure on the other one to also get with the peace and prosperity bandwagon. But then we have this breaking news just happened right now. Tara Bull posting Trump's note on Truth Social. Here we go. I just completed my 2-hour call with President Vladimir Putin of Russia. I believe it went very well. Russia and the Ukraine will immediately start negotiations towards a ceasefire and, more importantly, an end to the war. The conditions for that will be negotiated between the two parties, as it only can be, because they know the details of the negotiation that nobody else would be aware of. The tone and the spirit of conversation were excellent. If it wasn't, I would say so now rather than later. Russia wants to do large-scale trade with the United States when its catastrophic bloodbath is over. And I agree, there's a tremendous opportunity for Russia to create massive amounts of jobs and wealth. Potential is unlimited. Otherwise, the Ukraine can be a great beneficiary of trade in the process of rebuilding its country. Negotiations between Russia and the Ukraine will begin immediately. I have so informed President Volodymyr Zelensky of Ukraine, Ursula von der Leyen, President of the European Commission, President Emmanuel Macron of France, President Minister Giorgia Meloni of Italy, Chancellor Friedrich Merz of Germany, and President Alexander Stubb of Finland during a call with me immediately after the call with President Putin. The Vatican, as represented by the Pope, has said it would be interested in hosting the negotiations. Let the process begin. And then Putin through Reuters reporting, and Mario Nothal is where I found this, after a phone call with Trump, Putin says the war in Ukraine might finally have a way out, and he's crediting direct diplomacy. Putin said, "We have agreed with the President of the United States that Russia will propose and is ready to work with the Ukrainian side on a memorandum on a possible future peace accord, defining a number of positions, such as, for example, the principles of settlement, the timing of possible peace agreement. I would like to note that on a whole, Russia's position is clear. The main thing for us is to eliminate the root cause of this crisis. We just need to determine the most effective ways to move towards peace. Direct talks between Russia and Ukraine gives reason to believe that we're generally on the right track," end quote. Okay, now that you would think would be great news. You would think the market would be up. I'm not going to the numbers yet, but I'm just checking to see whether what I saw just a minute ago is true. And the reality is that after all of that reporting, just about, I don't know, as I'm doing this right now, that all came out about 25 minutes ago. The market is slightly off, not big off, but slightly off. It had been going up and it started trending a little bit down and continues to be there. We'll talk about all those numbers in a minute. April 2025 to 99.4. This is according to the leading economic indicators. As I note, nobody pays attention to them. I don't think it had anything to do with the market going up or slightly off this morning. Those were reported at 10 o'clock California time, so about an hour and 15 minutes ago. So at that point, the market was going up and continued up. So in April of 2025, it dropped to 99.4 with 2016 being 100, so very, very close to this 2016 number. It declined by 0.8% in March, revised downward from the 0.7. The LEI declined by 2% in the 6-month period ending April 2025, same rate of decline as the previous 6 months. The U.S. LEI registered its largest monthly decline since March 2023, when many feared the U.S. was headed into a recession, which it did not ultimately materialize. Most components of the index deteriorated, but notably consumers' expectations have become continuously more pessimistic each month since January, while the contribution of building permits and average working hours in manufacturing turned negative in April. Okay, so here we go again. We have these surveys of consumers that were turned out to be complete nonsense. Everybody's talking about it now. They only polled the first half of the month, they only polled about 200 to 250 people. They found that the Democrats thought that inflation was going to go to like 9%, and that Republicans think it's going to go to 1.5%. And that's out of 250 people. It's a ridiculous polling. So here you've got, no wonder nobody's paying any attention to the leading indicators when they can get this result because of the result that they're getting from the surveys that are taken of 250 people. This widespread weakness was also present when looking at 6-month trends, resulting in a warning signal for growth. However, while the 6-month growth rate of the LEI went deeper into negative territory, it did not fall enough to trigger a recession signal. The Conference Board currently forecasts U.S. real GDP to grow by 1.6% in 2025, down by 2.8% in 2024, when the bulk of the impact of tariffs likely to hit the economy in Q3. They don't mention in their note here that the 2.8 growth in 2024 was almost 100% on the back of government spending. The Conference Board Coincident Economic Index, meaning what's happening right now, inched up by 1.1% in April to 114.8. There's your headline. There's your headline. It inched up in April on the coincidence score. The CEI rose by 1.1 over the 6-month period between October and now, slightly up from the 0.9% growth over the previous 6 months. So what do you say? The CEI's 4 component indicators, payroll employment, personal income less transfer payments, manufacturing, and trade sales and industrial production, are included among the data used to determine all this information. The Conference Board's lagging economic indicator for the U.S. increased also. So basically, if you believe anything they say, what's happening right now is actually good. It's actually up. Market Watch, April 2025 to 90. Whoops. No, I repeated something. I'm so sorry. But that was Market Watch reporting. No, it wasn't actually Market Watch reporting. That was actually from the leading leading economic indicator page. This is what MarketWatch had to say now that I've got all my stuff lined up the right way. The U.S. Federal Reserve just pulled off something stealthy. I reported this last week, but now it's being reported that this is continuing. I also saw somebody that I trust say that this may be a nothing burger, but let's report it anyway. The U.S. Federal Reserve, over 4 days last week, without fanfare, vacuumed up 43.6 billion in U.S. treasuries. However, as we'll see in a minute, is not helping. That 8.8 billion in long-dated 30-year bonds on May alone, plus 34 billion early in the week, and that's not exactly small change. Quietly returning to a quantitative easing trough isn't standard Fed housekeeping. It's like a bank robber returning to the scene because he forgot his car keys. Let's talk straight. This isn't tightening. It's stealth easing. It's monetary policy on tiptoes. Some traders have begun to notice, and smart investors should too. But as I said, I think it was EJ and Tony who said that this might be a nothing burger, but what isn't a nothing burger is they're not selling. They are buying. I think that's important. Commodity traders in particular have a nose for monetary sleight of hand. Gold, the ultimate financial cynic's metal, has risen sharply. Good writing. Has risen sharply since early 2024. Gold doesn't believe in politicians, central bankers, or economists, even the Ivy League types who wave their hands and promise stability. It believes in numbers. But this isn't just a U.S. game. China has jumped into the gold pit too, brings a bigger shovel. China's central bank just cranked open its vault doors by dramatically raising gold import quotas, letting local banks swap U.S. dollars directly for bullion. That's China quietly telling Uncle Sam that holding all those U.S. treasuries is starting to feel like something less prudent and more like playing roulette while the house is on fire. Think about it. Even if China converts into gold a modest 10%, of the 784 billion treasury stash it held as of February, it would send tremors through global markets. China isn't hoarding gold because it matches the current curtains. It's preparing. This is really good writing. I wish I could write this good. It's preparing for a monetary earthquake. Central banks around the world are doing the same. America just imported a mountain of gold. Nations are bracing for the next seismic shift in global monetary power, and goes on to talk about Bitcoin as well. I'm reporting all of this today, not necessarily because I believe every bit of what's being talked about there, but I think there are people out there that do, and therefore it moves markets, and you need to know about it. I do know that many countries are selling bonds, and many countries are buying bullion, and individuals are buying bullion. And so we're seeing this gold run up. We are seeing a Bitcoin run up now too, as well. And I hate that too, as well. Hit me over the nose the next time that I combine to and as well in the same sentence. It's the stupidest thing ever. Okay, I'm sorry. I just can't stand that. It's a real pet peeve of mine. But I don't think that this is going to last. I don't think that this whole, gold rush and bond issue are going to last. I think that the Trump administration is doing all the things that are necessary to get the bonds to come down, bond yields to come down, and that will cause gold to come down. You watch. All right, let's go ahead and take a look at those numbers. What's happening right now? Well, yes, the market has gone down after the Russia news. I don't know. I can't figure that out. It is definitely down. Tesla is back to being off $10 for the day at 339.67. It was only down 7 for a second, and it had been going up. Okay, so the weirdness of the market is that the market all went down this morning, exactly where it had been kind of in the overnights all weekend. All the expectations in the pre-market last night and this morning where the market would be down about 1%, the S&P down around 1%. Tesla looked like it was going to be down around $10. And that's what happened in the morning. And then the market started to recover, but Tesla didn't. Oh, no, I'm sorry, did it first, and then it dropped away, which could have been this USA Today report, or it could have been the Cathie Wood note. But anyway, and then Tesla started gaining momentum all by itself, having nothing to do with the rest of the market. Looked like it was going to join the rest of the market in the green. And then the Russian news came out, and now everybody has tipped down. So maybe there's something else. I'm not sure. But let me know in the comments if you see something else out there that might be impacting things. You've got the Magnificent Seven all down at this point, except for Microsoft up a little bit. but you've got like Meta down over $1, Apple down $3. So what does all this mean? What's going on? Is it really about Russia? You would think the Russian news would cause the market to go up, not down. Cathie Woods are all down, except for Insignia, for Insego, and for Block. Those are both up a little bit. Our Insignia actually is up a lot. I don't know the story on that really, but it's just one of the ones I have on here is a Cathie Wood. Okay, let's go ahead and take a look at bonds. They were going up, of course. This is exactly what was expected. Over the weekend, they were up 3 basis points. Then they came down a little bit from that, but now they're back up to 4 basis points. They were higher than that earlier. They had actually touched on 4.5, a little bit over 4.5, but now we're at 4.477. I continue to say this is a buy, a buy, buy, buy. That's just me. I'm not buying them myself, so I'm sorry. I'm not eating my own dog food, but I will say I believe that this is going to be over shortly. We've got oil edging up 32 cents, 62.81. Brent, similar. Natural gas, though, down almost 6% at $3.14. I need to really dig in. I'll try to remember to dig in this later today. Maybe Larry and I will talk about it on the show with him later today. Gold firmed a little bit, but it's really still at 3,231. Remember, it was a 35, right? Wasn't 30? Yeah, it was over 35. Silver is up 0.39% at 32.48, about where it's been, right in the middle. And copper up 1.43%, almost exactly where it's been. 4.66 has been very common ground for copper. Dollar is retreating a little bit, but looking mixed to me as I look at here. And the Bitcoin is up to 105,217, up 960 today. That is, again, what's going on with Bitcoin? So many things could be contributing to what's going on with Bitcoin right now. I think technicals are probably a big part of it. And I am beginning to be a believer that at least Bitcoin is a indicator of risk on. And I do believe every indication would be we're in this risk on environment. Speaking of, I'm just curious if VIX has moved here. Let me just do that real quick and see. Yes, it's back up over 18, but that's not much of a move. So we continue to be risk on. Or more risk on than risk off at this point. We continue to have a bizarre market this morning. Absolutely nothing about the market this morning makes sense to me. What do I think is going to happen today? This could be an excuse for profit taking. This could be because we've had this big run up. We've been run up in Tesla. We've had a big run up in the overall equities market, and this could be okay. We've gone a little far. Let's take a breather. If that's true, I would expect to see the market kind of flat for the next couple of days, moving right around where it is right now. Could take a dip down to a full 5% off of the all-time high in the S&P, which would take Tesla down a little bit more. But by the end of the week, I suspect going into that last week of the month where there's going to be a lot of reports, a lot of economic reports, and based on the good news that we're seeing worldwide, I think we should be back on the track to get those all-time highs on the S&P and the all-time highs on Tesla as predicted by late May or early June. I continue to hold to that position. Watch for Larry Goldberg later today at about 4 o'clock, 4:30, something like that, and Brian White at 7:45. And last night, of course, we did a couple of things, actually. We did my regular Sunday night program, which we call Monday Morning, which gave you a forecast for the rest of the week. If you didn't check that out yet, you might want to. But also, we had put all the CERN Basher bios together into a 1 hour and 30-minute presentation about the world of CERN Basher from birth until now. And if you haven't seen that yet, you might want to check that out. I'll put both of those cards up right here. All right, that's all I got for you right now. It has been great, as always, talking to you.